In this video, I will share with you what I think is going to happen next for Tesla stock and broader markets. Tom Lee actually says, and I will share the clip here in this video, that this could be the bounce, this could be the lows of the first half of the year for the S&P. But he is a little concerned about the labor market. And, well, I think you should see that. So before we get into everything else, specifically in regards to Tesla, what I'm doing in markets right now, why I'm a little nervous, I do want to share this post with you that I made on X. If you have not followed me on X already, give this account a follow. It's Michael Tyler's, pretty easy to find, and I think you'll gain a lot of valuable knowledge from just following this account. I write, the first bear market bounce just happened. And no, I'm not suggesting we are in a bear market already, nor will we be guaranteed to go into one. The rally into the close on Friday looked like a quote-unquote bear market rally. Obviously, without the bear market. We got really ugly economic data and stocks rallied 1.6% on the SPY for no reason. Inline PCE, terrible personal spending, inflationary income data, and Trump and Ukraine drama doesn't help either. Yet stocks still went higher, mostly because of historically bad sentiment. Unfortunately, until we get some clarity on tariffs and most importantly, the direction of the economy, investors will sell this bounce. Seems like a strategic unload to me. Tariff clarity is important, not just for the number, like the tariff percentage, but really because the Fed can make an assessment. Without the tariff threat, the Fed would be cutting rates at the next meeting with the econ data we have recently gotten. At this point, Wall Street is still saying, quote unquote, growth scare to describe the slowdown, and that's fair. I'm not going to argue that. It's a growth scare. But it won't take long for that to transcend into recession scare, and that could bring in more selling pressure. At a time with policy uncertainty and inflation issues, I can see a dangerous setup ahead, but it will be choppy, big down days and big up days. Consumer confidence is key to watch, since consumers pull back spending when they are feeling less confident. Example, if you are one of the 2 million government employees, and Doge, I believe rightfully so, is cutting spending and, as a consequence, firing people left and right, you're probably not going to be spending like crazy. Correct me if I'm wrong. If you are a government employee, let me know down below in the comment section. You are probably not spending more than you were before, right? You're probably saving more money. You're probably not going out to restaurants as much. You're probably not doing XYZ because you don't know next week if you're going to have a job or not. Okay. That is a confidence issue. Recessions are confidence problems, and recessions really happen when people have less confidence of really job security. They stop spending as much. Companies stop producing as much. Companies start laying people off. People get less confident. They stop spending as much. Companies are not bringing in as much. Again, they start laying people off. It is a feedback loop that kind of just keeps going in circles. As I say here, this can become a vicious feedback loop, let alone what tariffs could do. If companies can't raise prices, they will fire people to make up the margin difference. I don't think consumers are going to be willing to handle price increases from tariffs. You will get demand destruction, where companies just raise prices to a point where people are no longer willing to buy that product. Imagine if, like this Lipton green tea. Green tea's kind of been my thing recently. If this was $3, $5, yeah, I'm not buying it. But I got a 12 pack for $5. That's great. But if that 12 pack is $10, you're going to think differently about buying it, right? So it's demand destruction. It's based on price and really the velocity, okay? So if companies are hit with a 25% tariff, people are not going to be willing to brunt that entire cost. So companies will go and make up the margin difference internally, okay? By laying people off, potentially adopting AI. That could be, bullish for AI. But it could be bad for the labor market, at least at first, okay? I go on to say, obviously, nothing is a guarantee, but these are dangerous economic times ahead. Raise cash, pay down margin, and to remember to buy on the days that feel like shit. The days that are really bad is when you want to be buying. Okay, not all at once, not everything you own on one day, because then you're going to feel even worse when it goes lower again. But you do want to be buying. And I know it's gonna be scary. It's gonna sound scary. This upcoming week, we have a lot of big data. I'll give you a brief rundown of the biggest, most important data for this upcoming week. But I can almost guarantee to you, on Friday was a bear market rally. Okay? Because we did not rally because we got good news. We rallied on bad news. This reminds me a lot of 2022, right? Where we would go through these aggressive rallies for really no reason. And they were always sold off. When we actually bottomed in 2022 was when the information started to change. When it looked more likely that we were not going to go into a recession. Okay. And really, we bottomed when everyone thought we were going to go into a recession. And then the data started to look a little bit better. You could see October 2022, that was the ultimate bottom. If we go ahead and look at something like personal spending for October of 2022, you could see here it actually went lower to 0% in November. It started to recover into December. And then January 2023 looked really good. And then a lot of the fears started to kind of unwind. You did have that concern in early 2023, but really the rest is history. Now, at that point, the markets had already priced in a full chance of a recession. Like a 100% chance of a recession was being priced in by Bloomberg. And, well, you fell 26.5% from all-time highs. You can also see that hiring plans for all business sizes has really deteriorated since the beginning of December. Now, in the past 2 weeks, we've got a negative 0.9% retail sales number, really bad number. We've had bad personal spending numbers. That was on Friday. We've had overall a deterioration in confidence. That's not a great setup because Doge, I don't think, is stopping, cutting government spending. Long term, that's great. Short term, not so great. You're turning off the stimulus. The government looks like they're going to continue to fire people, which creates more consumer uncertainty. If you're not confident in your job security, you're not going to be spending money as much. That's a broader issue for the economy, again, because of the feedback loop. Companies, I don't think they're going to be able to just raise prices across the board 25% if tariffs go into effect. Okay, companies will either have to take that on the margin or more likely raise margins internally. And probably the only way to do that at this point, or one of the only material ways to do that at this point, is to fire people. So when I look at this situation abstractly and take emotions out of it, what is currently a growth scare by the end of next week could be a recession scare if the data comes in bad.
The investors view this as a crisis when it's really a growth scare. So to me, I think there's a good chance we're making our lows for the first half, like this week. And
like down 5-6%, you mean?
Yeah, it could be.
Yeah.
I mean, the only thing is I'm not that optimistic about the job picture for the near term. So maybe that's one last leg. But the reality is that a lot of bad news has gotten priced in. So Bitcoin is down. It's actually not a surprise to our clients because Mark Newton, our head of technical strategy, really pointed out the cycles in mid-January that he was targeting 62,000 for Bitcoin by the end of March. So we're actually on our way to 62. But that's not a bearish development. It's just a retracement. If someone is playing AI today, it's not a mistake to bet on the leading companies for now. And so that means, NVIDIA and, other tech names around that. So I think the market is getting all of that right. And they're getting the power right and the need for things to support the expansion of data centers. But what they have to be mindful of is the correlation of all that is 1.0.
Mhm.
Like they're all going to stop working at the same time. To me, one of the, I think, sleeper winners from all of this is going to be the financials because they've underperformed the last 15 years. So they really have not caught a break since the GFC. And finally, an environment that is better for the banks and AI is actually good for business. And JP Morgan is, and all these banks show they made money through inverted curves, hyperinflation, tightest Fed ever. And now you have all this reversing. Once the tariff talks go away, the environment is favorable for American-focused companies, which would be, small companies, and they'll benefit from lower rates and their multiples are lower. So I think it's still a big opportunity. But in the middle of tariff talks, none of these groups can really do that well. Well, inflation is a problem because prices aren't going to go back down. And they're up 50% over the last couple of years. And so I think it's going to be harder and harder for consumers to tolerate more inflation. Like even if it's still at 3%, it's still going to be unbearable. If I look at it from a markets lens, I know a lot of people are saying that there's a second wave of inflation underway, or it's picking up and you're seeing it in the consumer surveys. I think one, we don't know what the seasonality is. And I think the consumer surveys themselves are actually very flawed right now, and they're picking up less the fact that egg prices are up, and I think more political respondents. Like the UMich survey, there's a huge bifurcation between Democratic views on inflation versus Republican. And the bond market itself is giving very conflicting messages about inflation. In fact, I would say if I looked at what the bond market's saying, I think it's saying there's no problem with inflation. The reality is that if policies are enacted that create such a severe shock because of tariffs, then we could have a recession, right? I mean, that's like a fact. Because, if you put a 300% tariff or something, we don't really know how to titrate that number. And that's why investors are nervous. But it's at the same time, the tariffs are accomplishing the administration's goals. Because if I was the White House and I know that I have some opposing risk from the Fed today, because the Fed's hawkishly paused. Well, if the tariffs are causing confidence to fall and business activity is slow, then the Fed has to get off neutral. But then everyone's playing a dangerous game because, as you know, you don't want to get stall speed in the economy, because the day the economy gets to stall speed, we open up the uncertainty of a recession, because, a shallow recession, a recession is unknown once it starts.
And that is obviously going to put some pressure on stocks. And like I said in the post that I made on X, I don't see the markets recovering, like ripping new all-time highs, until we either get so bearish that the only obvious outcome is it's not going to be as bad like we had in 2022. When we bottomed in October, it was because literally everyone was expecting a recession. Like 98% of investors. If you get to that point, markets are going to be down a lot, and stocks are going to bottom. Or until the economic data actually starts to look better. Does that happen in this upcoming week? I don't think so. Turning off the government stimulus spigot, as Doge is doing, creating, economic uncertainties with consumers, it's just not great. And economic trends usually don't start and then stop immediately. They can last a while. Now, in the economic data that we're going to get this upcoming week, you are going to get ISM manufacturing PMI secondary data that comes along with that Monday morning. So that'll be important. Fed Musa Liam speaks at 11:35 in the morning. On Tuesday, Fed Williams speaks at 2:20 p.m. and the RCM TIPP Economic Optimism Index. Tuesday is actually going to be the slowest day for economic data. Wednesday, you are going to get the ISM services PMIs. This is critically important because services is 70+% of the economy. If services really start to weaken, that's where you're going to get some of those recessionary, dynamics, fears that build in markets. You will get the ADP employment change at 8:15 in the morning on Wednesday. Fed Beige Book at 2 p.m. on Wednesday. Thursday, you are going to get the imports, exports, and balance of trade number for January. Initial jobless claims. Look at this. Last week was 242,000. Current estimates are 340,000. That's crazy. Okay, markets are not going to like that if that's the kind of number that we get. Now, also on Thursday, Fed Waller speaks and Fed Bostic will be giving a speech. On Friday is really your big day. You will get the non-farm payrolls. You're expecting 133,000 jobs. With all of the layoffs that we have heard, especially from Doge recently, I think it's going to be hard to beat that number to the upside. 133,000 jobs. What about like 30,000 jobs, 40, 50,000 jobs? That's where you would get more of the growth concerns, the growth scare that comes in. And that is the worry for this week. Unemployment rate expected at 4%, but you will get a lot of speeches from Fed officials. Fed Williams, Fed Bowman, Fed Kugler, and Fed Jerome Powell will speak around noon on Friday. In terms of Tesla stock, I actually think Tesla's 40+% fall from all-time highs is actually pricing in the recession risk. I think at this point, you're not pricing in the things that you think you are. I think Tesla is actually priced in some recession risk. Thus, I think a recovery is going to obviously be larger for Tesla than the broader markets. And some of the downside could be somewhat limited at this point. Unless we start to get real issues with the Tesla business, which we have not gotten yet, I would expect a lot of support and demand to come in around 250. The ultimate bottom could be around 200 if markets do go through like a full-blown 10-15% correction. So yeah, there could be more downside from here, but I do think you've already priced in a lot of bad, a lot of recession risk for Tesla specifically. And you know, I have personally been buying Tesla. I think I've bought close to 40, 50 shares in this sell-off so far. And I want to do double, triple that as much as I possibly can around these current levels. Now, I think the stock could bounce probably to the 310s, 325s potentially alongside the broader markets, but I don't think this is going to be a sustainable bounce. I do think this is going to be, unfortunately, a bounce that gets sold off, a way for hedge funds to unload more positions at slightly higher prices. And look at this. This was the high in 2021 when you first started to roll over heading into 2022. I mean, I'm not going to say we're going into something like 2022 again, although it's possible. These charts look eerily similar. Like very, very similar. Okay, if things do play out again, you could see a bounce, but that likely gets sold off. I mean, just look at how crazy similar these charts look, right? You come down, boom, like we did here. You come down a little bit further, you bounce up again, you come down a little bit, like here, you rip up, new all-time highs, hang out there for a couple days, and you start to come down. I mean, they look very, very scarily similar, to say the least. And unfortunately, with the S&P down 3%, I don't think you're accurately pricing in the risk of a further slowdown. And that's why I want to be careful here. Again, I've been buying Tesla, and I think you want to be very specific with what you buy. I think the ultimate best thing to do right now is to raise cash to pay down margin if you have not done so already. And positions you absolutely do not love for the long term could be good to trim if this bounce does continue, because that's what hedge funds and institutions are going to do. They're going to trim into this bounce until there's more clarity on the economy or until the Fed starts to be more accommodative. But again, if the Fed were to come out on Sunday and cut rates, is that going to be a good thing for markets? No, that's going to be fearful. So it's really a balancing game at this point. You know, 3% from all-time highs, 5% overall fall just doesn't feel sufficient if we're going to start using the recession word more, which seems like the path we're heading down, unless, you know, people just get more confident or Doge stops, you know, cutting off the spigot of government spending, really stimulus spending. You know, this is the highest level of deficits we have had during a non-war time. Deficits are very stimulative. If they really want to bring down that deficit, it's going to be a lot less stimulative to the economy near term. Long term, that's great. Get the budget in balance and let the real economy thrive, great. But short term, it's like taking alcohol away from an alcoholic. It's not, or a tablet away from a tablet child these days. It's not pretty for a little while. And that's the setup that we are potentially in. But again, you do not want to sell your portfolio here. You do not want to miss out, because what if things are great? What if inflation comes down, the economy bounces? What if, these effects are not super long lasting and maybe we get back to having a really bullish market? You don't want to miss out on that. You just want to be ready to take advantage of the downside if that comes. And that's why I have been buying Tesla here, and I will continue to buy Tesla here. And I think Tesla's kind of a different story because it's down so much. Would I be buying the headline S&P here? No. Would I be buying Apple here that's pretty close to all-time highs? No, I actually like Apple as a short for the downside if it does come down. Tesla here? Would I short Tesla here? Would I sell Tesla here? Absolutely not. Tesla's a great buy here because it's already priced in some of that recession risk. It's already fallen so much. And this, sell-off really does nothing to change the long-term conviction of Tesla or long-term price targets of Tesla. But, short-term, it does create a little bit of hesitancy from my part in broader markets. And obviously Tesla, if recession fears do rise. So let me know what you guys think about this down below in the comment section. I would love your thoughts on that. Have a great rest of your day, and I will see you in the next one.